Good morning, ladies and gentlemen. How's everybody doing today? Great. That's fantastic. Glad to hear it. So today, a little bit interesting. We have pretty much all bigger name stocks. Everything on this list is pretty expensive, as per they usually are. ELTK is a possibility. I wouldn't get my hopes up for a 2-day continuation. There might be a small early morning pop, but most likely nothing of what we seen yesterday. Really, yesterday, this whole run up, yeah, yesterday ELTK was a good stock. I actually didn't trade it once. Unfortunately, really is what happened. I wasn't paying attention to it. There's a perfect cup and handle pattern here you could have traded. Then there was a nice bullish pennant flag pattern you could have traded there. This turned into a FOMO trade. Bunch of new traders got FOMO, bought it up, ended up getting halted, dropped out a little bit, crashed. I think I traded a little bounce here off the 9, quick, like $170. Oh, I did trade. I traded for a small bounce for like $170. I was about to trade this bounce, ended up not pulling the trigger. Then we had a short squeeze, a $2.30 short squeeze here. If I was sticking around to trade, I would have nailed that, but I stopped trading yesterday about 10:30. So, but here we are. That was a beautiful play, beautiful setup right there. That was a bullish wedge, flag, pennant, whatever you want to call it. That was good. So that was another short squeeze. This was another short squeeze. So pretty much all that took place yesterday was a bunch of short squeezes, except for the beginning of the day. Beginning of the day, this was your regular long play. This was our good long play off a cup and handle. Then we had a decent flag set up. This turned into FOMO for new traders. And then it got halted, crashed. Shorts got squeezed off the bounce. And then the shorts got squeezed late day. And then we continue, and shorts got squeezed again. So basically, after this first initial part of the day, the rest of this was short squeezes taking place. So anyways, really good stock yesterday. I wouldn't expect anything similar to what happened yesterday. You might have a quick push, quick pop, but don't anticipate a run like that, then a push like that, then a push like this. Just not going to happen most likely. But it was a good trader. So it's worth keeping on watch this morning for a nice push, but again, don't get your hopes up, or don't get hopes high on that. Okay. Good, thanks. Coolly appreciate that, brother. All right, what's going on, guys? Everybody, good morning, good morning, good morning. All right, so next on the list here that we'll talk about, really just going to run through these next couple really fast because there's not too much to talk about. DG, Dollar General, earnings report, gapping up. Okay, it's just a pretty simple, straightforward play. It's an earnings report gapping into, I believe, the 52-week high or close to. Yeah, it's right at about the 52-week high. So on this one, basically, the way I'm going about it is initially following for a long play. It has more of a bullish look to it this morning, more bullish sentiment so far. We've gapped up. We've consolidated pretty well over the volume-weighted average price here. And even with this last candle, there's a slight curl. So for me, watching for a push up and over 126.70 for a 52-week high breakout. Maybe be able to snag a couple points there on the trade long bias. If you look at it from a 4-hour chart, it's up to that level. So there's two ways to go about it. You know, really watching for a long play over and watching for a short play if it can't get over. So really just keeping an eye on the 126.84 or the 52-week high level to determine which way I will trade it once price action gets there and how price action is trading. Next one is DLTR. This is Dollar Tree. So same thing, another dollar store reporting earnings. First starts with a gap down, gets bought all the way back up. We'll follow this long bias. Whenever we get stocks that gap down and the price action recovers pretty much all the way to the start of the candle that drops down, it's usually a bullish sign. Not all the time, but generally speaking, the stock usually stays a little bit bullish afterwards. So going to be following Dollar Tree long bias as well, probably up until the high of 100, the top of this candle, and over possibly, depending on how price action is when it gets there. Okay, so two Dollar Tree or two dollar store stocks this morning: DLTR and DG. Next earnings is VEEV. Again, this one is same outlook for a 52-week high breakout. It's already up really big from 134 to 146. So again, how much more to the upside could I expect? That's where I'm at in my head. But if you look at the 4-hour chart, you'll recognize that VEEV has gapped up right to the 52-week high. So definitely going to be following this for a break into the 52-week high or a move into new all-time highs for the stock. Maybe not all-time highs, but at least 52-week high. Okay, all-time highs. So yeah, a new all-time high here on VEV. So really just following this long bias over the 146.82 spot. Again, pretty straightforward. We just came off a dip. Earnings comes out pretty good. We press up to 52-week high, looking for a 52-week high breakout here on this one. All right, pretty straightforward there. Next one on the list, BYND. Only reason I'm mentioning BYND because I think it's actually kind of interesting the way it has been trading. I still find it hard to believe, very hard to believe that Beyond Meat should be over $100 or even as high as it is. It's pretty impressive. But anyways, there was a bunch of like press releases yesterday on the stock, and basically came out, said that the Beyond Meat burger sold out of all the stores in Germany. Beyond Meat reaches 100. It's got a market cap or something of like $100 billion in a couple years. I mean, the news really just, it's been all positive. Beyond Meat is a disruptor as plant-based meat industry sales is poised to reach $100 billion. It's like, okay, that all sounds great, and people are driving the price up like crazy. So I think this is just a situation where there's a ton of hype and a ton of momentum behind. There's a ton of hype and a ton of momentum beyond Meat, and I think it's worth following. I think there's money to be made on this stock. Now, I don't particularly like to trade Beyond Meat, just because the goddamn spread is so wicked. It's just not easy for me to trade, so I may or may not trade it, but it's definitely a notable mention considering the stock is like at 104. All they do is sell plant-based burgers. I mean, the news is just all fire. I think it's worth following. I think there's still some good trading potential on it. And holding long-term, I highly doubt it will hold long-term. I mean, so many things that could go wrong. I can already think of what's going to happen. One day, somebody's going to eat a burger and they're going to get extremely sick because the Beyond Meat burger had some plant-based something in it that had some type of food poisoning or some type of pesticide or whatever. Somebody eats it, next thing you know, they're sick, and Beyond Meat has to recall 100 million little burger patties. I can already see it in the future. That will probably happen. And next thing you know, the stock is trading at $70 a share. Like Chipotle. Right? It happens basically to every single plant food-based company. They all get some type of, like an E. coli or some type of bacterial, like thing run around the food, and then they all get smoked for it. So, again, it is what it is. What's up with the black screen? Nope, no black screen here. So those are the 4 stocks that I'll mainly be watching today. I generally always keep an eye on Netflix. I'll pop back and forth, kind of just run through and look at AMD, BABA. I generally don't follow Facebook or Apple too much, but it's usually like BABA, NVIDIA, AMD, Netflix. Those are kind of like the mains that I always have on watch. And then I mix in a few oddballs because the oddballs are usually the ones that can, maybe create a really nice move for you. William, don't think that Tesla's found the bottom yet. It's tried to, excuse me. Tesla's tried to find the bottom at about 180, 181, but has not fully because, well, that could be a lie. I mean, it's not even true, but Tesla's trying to find the bottom at 180. It's bounced a few times, but the bounces are starting to get less and less strong. They're starting to still fade to the downside. So I was more long biased for the past couple days, and now my gears are shifting to neutral to bearish. Neutral in the sense that I don't want to give up on the potential of a bullish move, but I'm not really bullish sentiment anymore. I'm more like neutral, as in like, well, if it goes down a little bit more, okay, cool. If it goes up a little bit, cool. Don't really care. And I'm more bearish on the idea that I expect that we're probably going to start seeing some moves lower here in the next couple days if the market doesn't bounce or if Tesla doesn't somehow start spiking. So back to a bearish, neutral, kind of neutral bearish sentiment on Tesla right now. I think we're going to see downward pressure a little bit longer, or the bounce just isn't going to be as easy, right? We all just want to bounce. It might put up more of a fight and not bounce so fast. Yeah. Oh, that's another thing. I didn't mention that, Alex, but you're right. PVH is another good one to watch. That's one that gapped down today, too. I'll actually probably take a peek at that at some point throughout the day. I would have no clue if any of the Tesla cars are actually good. So, we'll see. Other than that's really all the stocks that I have for the day. SOLY, I mean, not going to say I told you so, but I told you so. Yeah, SOLY went down yesterday. If you're holding this stock, you might as well get rid of it because it's about to crap out on you and you're going to get smoked. It might hold up for a couple days. I was actually thinking it might hold up. I mean, today it's most likely going to get smoked, but it's possible that it actually holds up. Because the brokers are making a lot of money off retail traders right now that are shorting the stock through locate fees. So the stock is going to be a hard to borrow stock, and the brokers are going to be charging retail traders a shit ton of money to get those shares to short. So the longer they kind of keep it up within that high short, as long as the price action of the stock stays at a price where retail traders would still really love to short the stock because there's still a lot of downside potential, then the brokers can still make a shit ton of money off the retail trader. So as long as it stays up high, people still want to short, and as long as people still want to short, people will be willing to pay the hard to borrow locate fees for SOLY, which means brokers make more money. So again, it's not surprising that it didn't fully crap out yesterday on its first day, but today probably going to see more downward pressure. And if we don't Still doesn't surprise me. I don't know what the borrowing price on SOLY is, but it's not cheap. Yeah, we already went over ELTK. It's worth watching, but most likely not going to be anything too special there after yesterday. And I didn't even, and honestly, I kind of blew past it yesterday. I should have put more thought into it, but I'm just so, something that I've kind of built into my head over the past year and a half is just most penny stocks end up being shit anyways. So it's like, the ones that are good, I just kind of categorize them in shit anyways. So it's like, just because most of them end up being terrible, I've generalized all of them to being terrible, which then leads me to actually missing the good ones. I've seen myself do that numerous times this year. I miss actually good penny stocks to trade because I'm just so built on the idea that they're all terrible or they're all going to perform terrible, which they usually do. So 80 to 90% of the time I'm right, but that 10% that I generalize, I miss the move. And it's like, well, you're an idiot, but it is what it is. So it's something I've been trying to kind of rewire my brain, is to give more of a thought to the penny stocks that I'm looking at before just categorizing them as being shit on the day, because then I'll probably catch more moves. So I've got to get back into the rewiring of the brain in that manner. But anyways, I don't think I remember trading a stock like GH. So what you have to understand too is the spread. How can I point this out? Yeah. Well, see, if you're going to trade a stock with the Briggs spread, I mean, generally you want to do a limit order, right? Don't try and do market orders. Even I'll do a market order on a big spread stock every once in a while, just because I already understand spreads really well and how they work. Also, the spreads are made from market makers, and when spreads are tighter, remember that there's the stock market. Like as a whole, there's the stock market, okay? Within the stock market, there's multiple different markets. Like each sector, right? Like the healthcare sector, then you have conglomerates, and you might have technology, right? Each sector in itself is a different market within the stock market, right? And then you have penny stocks. Penny stocks are a different market within the market, right? And each stock itself has multiple market makers, which means each stock in itself is its own market, right? And each market maker makes the market for that particular stock. When the spread is wider, this is kind of like a multiple part question, but this is probably something you guys have never heard before. So I'm going to try and keep it simple. But within each stock, there's multiple market makers depending on how active the stock is. So just a ballpark figure, if let's just say the stock on average trades 20 million shares a day, something like AMD trades millions of shares a day, there might be 10 market makers per that stock, right? And then a mid-cap stock or low-cap stock that trades like 1 million shares a day, probably one market maker, right? And when the spread is bigger, that's actually sometimes the market makers saying, hey, stay away from the stock because we don't really want a lot of people trading it, right? Because market makers, they have inventory of the stock because they're liquidity providers. So when someone comes in and does a market buy, they'll sell shares to them. And when someone does a market sell, the market maker will buy those shares. So when the spread on stocks is generally bigger, that's actually sometimes a way of the market maker saying, hey, we're not making a good market for you to trade in, so you should try to stay away. Whereas when the spread is tighter, a lot of times there's more liquidity, most of the times, and they're saying, hey, we're making this market better to trade. This is a better market to trade right now, hence the higher volume and the tighter spread. So it's pretty much a no-brainer that it's easier to trade a stock with a tighter spread because of less slippage and so on and so forth. But when the market or when the spread is tighter, a lot of that spread, remember, is made from the market maker. It's not made by people, it's made from the market makers. And when that spread is tighter, right, that's a way of the market maker saying, hey, come trade this right now. Trade it. Why? Because chances are they probably have a lot of those shares, a lot of that stock, and they want to start getting rid of it, right? They want to sell it. They want to get it off their hands to people, right? But when that spread is wider, they're like, hey, I'm good. I don't really need to get it off my hands, so I'll keep this really wide spread, right? But when it's tighter, it attracts traders. And what attracts traders is volume. More trading, more people trading, more shares get exchanged. So tighter the spread, more oftentimes it'll be more of an active stock. And a lot of times when spreads are tighter, a lot of people are trading them. Market makers have a lot of liquidity of that particular stock, and they probably want to get it off their hands, or they want to readjust their liquidity or their inventory of their stock or different shares, and that's just it. So I hope that makes sense. Just reading a couple questions here, guys. Yeah, I just went on a little tangent there and taught you guys a pretty cool lesson. So yeah, that happens. That takes place. Yeah, not really much more to it. All right, it's 8:57. Got to get back to our private group. Thanks again for tuning in, as always, and I'll see you guys on the next video. With that being said, take care. Have a good day. Hopefully stay green. Hopefully don't lose money, and I will see you guys tomorrow morning. Everybody, take care.